Did you wake you up from your nap?
No, I had to take a quick shower. I was outside doing some man work today.
Man work, look at you.
The storm over the weekend ruined all my plants. Big mess.
Hello, everybody. It's your boy, Chicago Sean McLaughlin. I'm the Chief Option Strategist at All Star Charts, joined by Steve Strazza, our main man, our head janitor. He's the cleanest one, just took a shower. Our Director of Research. What's up, Steve Strazza?
Oh, man.
How'd you like that intro?
You know, I was just going to say, you're getting good at these intros.
All right, so right before we went live, I dropped this on you. I put a little joke tweet out today. I didn't really mean it. I was just kind of having a little fun. I did put it out with a wink, but I said, I brought my old tweet back, the old favorite that says, it's a bull market, you know? And look, I don't really believe, well, I could be convinced that the bull market is back. But boy, what a rally we've had today. And we were talking right before we went live about how it feels like maybe there's been a little bit of change in character recently where, you know, when we were selling off, when the markets were selling off over the last couple of months, there were a lot of days where the markets would open higher and then just sell off all day, finish near the lows. And I feel like that has reversed a little bit. There's been a few, at least 3 or 4 days, I feel like in the last 2 weeks where we opened lower and then rallied throughout the day. And today being another one of those days. What do you make of that, Straz? I mean, are we seeing a change of character here?
I think it's really interesting. I'm looking at an intraday chart now. You're not wrong. I would say even since like late May, you're starting to see some more positive intraday action. I love looking at the tape for information. And that has been a problem since late last year where bears have just more or less been in control. So little stuff like that is nice evidence. I think it just contributes to the growing list of bottomy things that we're seeing.
Right. And we're starting to see a lot of the what we like to call riskier assets starting to catch a bid. We were talking about China this morning on our spaces. We've seen some signs of some green shoots in the crypto area. I mean, areas that have been getting hurt pretty bad all of a sudden aren't getting so hurt anymore.
So 2 things there. KWeb, Chinese internet stocks are up another 4% today. They've been an area of relative strength over the near term. And with Bitcoin, it always stands out to me the way price reacts on the heels of bad news.
Yeah,
bad news today with this CFTC regulation news coming out, and you're seeing a lot of the crypto stocks and crypto sell off. But Bitcoin is holding 29,000. This was supposed to be a really big deal. We're down 3%. That's just a normal day for Bitcoin. So in fact, kind of shrugging that off, I think is pretty bullish and still holding those 2021 lows, right?
Right. And, this is the flow show. So we like to talk about unusual options activity. And, the last few episodes that we've done this, Strazzy, you and I were kind of lamenting the fact that even though the markets have been selling off, we haven't been seeing any aggressive activity on the put side. And we haven't been seeing any aggressive bearish plays in the options market. And we were kind of making light of that as of, are people just trained to keep buying the dip and nobody's bullish? Or maybe they knew something after all, Strazza. Who knew? Maybe they knew something.
Who would have thought there would be more? When you look at the index level, I think put call volumes are, at an extreme, but not for individual stocks, I believe.
I believe you are correct. All right, so let's dig into this week's unusual options activity chart. Anything here standing out that's got your attention?
Well, should we just get energy out of the way? Should we just do energy first?
Hey, man, it's been the leader. Why not? Let's keep talking about the winners.
Oh, took profits in Exxon today, I heard.
We did, yes. We were making the bet on the $100 roll, and lo and behold, what happened? The $100 roll happened.
So that 100 level, right? We always talk about how it's a key psychological level. We came in today at about 99 and a quarter on Exxon. Not only did we take out 100, but with authority, Exxon's up over 4% today. Look at that candle. This is the best.
Well, I mean, look, this is like this is like a textbook $100 roll, right? We got into this trade when Exxon was trading around $90 and making a new high. And, the big reason was, and we said it, I wrote about it in the blog post. I think we talked about it on a live Twitter stream. We said, look, a big reason we like this trade is these stocks, when they start heading towards $100, they tend to get there and they tend to overshoot. And this is a textbook. As I'm looking at it right now, it's trading at 103. Textbook $100 roll. It never goes to 100 and stops. It always gets to 100, overshoots a little bit. And so that's what happened. And we had our spread got taken out today. We had a resting good till cancel order to take our spread out at our profit target, which it hit this morning, like really early going, like within the first 5 minutes of the day. We got out, and hey, excellent. That's how we draw it up.
Also like this one a lot for the $100 roll play because they also had their former all-time highs just right at like 105, low 100s. So they're going to make it all the way back there. They're probably going to retest those highs. And I think you'll probably see it in the coming days. But today we have Sunoco on our list. So another big popular U.S. oil and gas name.
What's that ticker? Oh, Sun. Obviously.
Oiling, nice basing action, not as strong structurally as some of the other names. Let's look at it. So we have this base here, trying to get back towards those 2014 highs. At a shelf, like a little shelf of former highs right here. Coiling action. This is a nice continuation pattern. Primary trend is up. Relative strength is not bad. Bottoming, basing as well. Like to see that. So we're just making the bet here that this thing heads back to retest former highs, similar to like we're seeing in Exxon now.
So we're talking energy. You like Sun. It's trading at 42 and change right now. I'm looking at the. If you guys look at my screen here, we got implied volatility looking not high, but also not cheap. I'm not sure what type of options volume this thing has. Let me pull it up here.
It seems like the implied vol entered a new range earlier this year and has stayed elevated. Is that odd or?
Yeah, I mean, we have kind of a weird thing that's skewing the chart a little bit back in July of last year. If we take out these are probably just weird prints. I would say we're probably in the middle, since August of last year, we're right about in the middle of the range. So again, not expensive, not cheap either. But I'm looking at the options chain here. Let's look at July and September. The bid-ask spreads in July, they're okay. They're cheap.
Is that July?
Yeah, we're looking at July right here. So the July 45 calls, which are just a couple bucks out of the money. They're bid 45, offered 55, so that's fair. But
flow was in.
I'm sorry. Go ahead.
Same contract that the bullish flow was in, the one you're looking at right now.
Oh yeah, right there. Okay. Oh yeah. I mean, you can see the options. The open interest is pretty high. I mean, dramatically higher than every other contract. The problem is that if I'm bullish on Sun, this July contract only has 38 days of expiration. I don't feel like that gives us enough time to play for a move here that the type of move I want to play for. So that makes me want to look into September or December. The problem is, at least in September, these options, at least the 45, look at that bid-ask spread. Bid 60, offered $1.45. That's pretty wide. I'm not sure what's going on there. December looks a little better. Yeah, these are much tighter in December. You know what? September might be the newly listed contract. So I don't know. There's more open interest there. So can't really explain why this bid-ask spread is so wide at the nearest or just out of the money options there. But maybe December would be the move, playing these options. These are tighter. I mean, let me bring up this chart again. If this thing were to break out, Strazza, I mean, give me a sense of where you think this thing could go. I mean, where are some levels we should be keeping an eye out for?
In a perfect world, we would resolve this triangle, take out those pivot highs, then get long. Energy's
so 60?
60?
You think a run towards 60 over, let's say, the next 6 to 12 months it would be a reasonable expectation if we break out?
Definitely. Mm-hmm.
Yeah.
Probably soon.
Okay. So in that case, maybe the December options are the better move. And I mean, you can buy the 45 calls just straight out and probably get them for about $1.90, maybe $1.95 if the market makers are jerks about it. I think probably want to just buy the call, just because like these other options are further out of money, that they either don't have a lot of juice or there's just no market there. I mean, look at this: bid 10 cents, offered $2. I mean, there's just not a big market there. So probably the play, if you were an options player and you wanted to get long Sun, I'm thinking the play here would be to buy these December 45 calls, maybe these 47.5 calls. You could buy those for about $1.20, maybe $1.15. And that has a 25 delta, which is what I tend to like. That's what I tend to prefer. I like the 25 delta options. And look, if you pay, let's say you paid $1.25 for these, right? At 47.5, if Sun makes a run at 60 between now and December, which is 6 months from now, totally within the realm of possibility. I mean, you're looking at 10x your money. Not bad, right?
Yeah, and I don't think that's a bad setup. Like I said, the one thing about this one is something like, what's one that's worked for us this week? Conoco. If you look at a chart of Conoco, I'll bring it up. So I'm just trying to compare Sunoco to some other energy names, and we do the best we can with this options list. That's the one energy name on it this week. Well, like here's Conoco, right? This has been a big winner this week, if I'm not mistaken. So we got a nice base, and we've already resolved higher. When you look at something like Sunoco, on the other hand, we're still chopping around. So I would like to see it resolve higher. Nice.
Yeah, I mean, this is one of those cases where, we love the sector, we love the space, and is this a case where some of these laggards are going to start catching up? I mean, in our company Slack this morning, Willie was talking about Rig, another one of those names that, like, is it going to start playing catch up? Although Rig's not an oil name, is it?
No,
it's a shipping.
No, it's oil, it's services, and it's really been lagging. It's up 13% today. I wonder if they had earnings.
They did not have earnings today, no.
It's just having a day. It is one of the higher beta names in energy, so it gets a lot of. Actually, pull up the rig options.
Let's check it out.
Super liquid.
It's very liquid. Yep.
Usually a very popular vehicle for institutions to make bets on energy.
Yeah, I mean. Well, hold on. Let me bring up the chart, see what the implied vol. So the vol is low, as you can see in this chart here on my screen. These blue squiggly lines here at the bottom are the implied volatility. As you can see, we're at the lowest edge of the range over the last year, so that's encouraging. If you wanted to play this with options, I mean, we've talked about this before, Strazza, in the past. Like, it's a $5 stock. I mean, if you want to get along, might as well just buy the stock. But if you're hell bent on leveraging into this thing, you could buy. I'd probably just buy the. I don't know, December. I'd probably go into December. Yeah, definitely go in December, because after that, the next series isn't until. Well, no, I'm sorry. That is the next month, January. I don't know. I just like the end of year options for some reason, but especially when we're in June. But you could buy those 5 strike calls for $1 right now. I mean, you're playing for a big move, right? I mean, you're playing for a break above the at least the yearly high. Let me break a weekly chart here. I mean, it was as high as 7 something back in 2019. And it goes even further, right? I mean, it had to be at 150, 178.
Yeah. This is one of the bigger oil companies in the beginning of my career.
Wow. That's come down quite a bit.
You're involved. What you see there, that big drop on the chart in 2014, pretty sure that was the BP oil spill.
Was it? Wow.
Involved, so it's somewhere on that chart. They were operating that rig.
So that chart looks less insane because it's a log chart, right? Like imagine if that was not a log chart, that dropped from 150 down to, I mean, almost to zero. Holy cow, look at that. Well, this is kind of like that Zoom trade that we talked about last week, right? It's like a thing is so far down. I mean, this is a much longer time frame though, of course, but I mean, you could almost make the case that this might be a good trade, like a good YOLO long-term trade, like almost like our CVX trade.
Yeah.
Like you could go January 2024 options if you want to get crazy. So that's a year and a half from now. You could buy the 5 strike calls. You could probably get them for $1.75. I mean, January of 2024. So 18 months from today. Do you think rig can go up $1.82 from here over that time frame?
No, I don't hate that trade at all.
You don't like the trade at all?
That's pretty good. What is the premium?
You could buy the 5 calls, $5 strike calls for $1.82 on the offer.
Can't be right. These energy stocks double and triple like in a week.
Yeah. So I mean, if this thing just goes to $10, which is not that big a deal for a stock like this, you've at least doubled your money, maybe more.
Problem is, I just hate the way it's acted. Like if you look through 100 energy charts right now, you're not going to find many that look like this. A lot of them have built out nice bases already, are climbing higher through them, resolving higher. Sunoco, nice base. Here we go. Conoco, nice base. Here we go. And then look at rig. It's just really ugly chart compared to its peers right now.
So you don't like this trade. You don't want to put this on.
I'm bullish energy, so I put it on for that reason, but I don't need to put it on.
Right.
But.
Well, if anyone out there who's watching this video today, if you decide to buy these Jan 2024 calls at the $5 strike, let us know. We'd like to hear about it. I'm not in it. I'm not buying it, and Strazza's not buying it either. But hey, it could be one of those big ass winners. It could be. And your risk is that your risk is limited to what you pay for the calls. And even if rig were to sell off a little bit here, these calls are not going to lose a whole lot of value, at least in the short term, because of the time that we have until expiration. Right. So, I mean, I don't hate the trade. I'm not putting it on, but I don't hate it.
I think it's interesting.
Yeah, interesting. All right, what else you got? Anything else interesting that has stuck out this week as you've been going through the unusual options activity?
Not software stocks. Look at the
software.
The list here, yeah. Them, Dropbox, Box. I don't know what Core Scientific is. Tech looks okay. Discretionary, I really don't like. I think that's a sector to 100% stay away from right now. I don't know about you. I know you've been reading the newspaper, but I feel like every morning when I wake up, I hear about another retailer that's just like blowing up.
Today was Target again.
It was Target 3 weeks ago too. So it just seems like for the consumer, you want to stay away from discretionary, but other growth stocks, the more techie stuff, are starting to look better, I think. And you're also seeing some interest, not just in the options market, but we're seeing insiders really get active in a number of tech names.
And look, if you want to take or look at a contrarian thing, I mean, our mutual friend Howard Lindzon had a tweet out, I think it was yesterday, or it was at least very recently, where he had mentioned, or he had pointed out that the inverse QQQ ETF products, there's a few of them, and many of them are leveraged. Like they all saw like record trading volumes recently. And so Howard was making the case that, well, if these things are finally seeing record trading volume, then a tech bottom is in. I'm putting words in his mouth. That's not exactly how he said it, but that was the takeaway.
Not a bad take. Like we've been complaining about it on here, not seeing enough bearish flow. A lot of that information. So I guess that's a step in the right direction.
Mm-hmm.
Remember Barnes and Noble? They're on the list too. You know what their market cap is?
I don't. Are
Bookstore?
they still in business?
Micro cap. Yeah.
They're a micro cap. Where are they? BNED? Is that it? Yeah. Wow. I can't remember the last time I stepped into a Barnes & Noble bookstore.
Been a while for me too.
But, you know, I'm a library guy. I love going to the library.
You know
Total
what?
nerd.
Mall stocks in here. I'm noticing a theme. Barnes & Noble, it's a mall stock. Bed Bath & Beyond, mall stock. Skechers, right? They sell Skechers at malls.
Ooh. Oh, I think you uncovered a theme here. Are investors getting bullish on malls again?
Mattel, don't they sell toys? Mattel, come on now.
Yeah, yeah. Whoa, that's interesting. I mean, when's the last time you heard anything bullish about a mall?
When's the last time you heard anything about a mall?
Right. I mean, the narrative for the last 10 years has been Amazon is ruining the mall. Like there are no more malls. They're all going out of business. They're all going to become Amazon warehouses.
I think people use Simon Property Group as like a barometer for that trade. So that's the REIT SPG, 50% drawdown.
That deserves some more digging there. I kind of like that idea. I mean, coming out of COVID, maybe people are going to start going back to the mall again. Maybe.
Why not?
Yeah. Maybe we'll start seeing some more some movies about hanging out at the mall like we did in the 80s. You're too young for that. Sorry. A lot of 80s movies filmed in malls.
Jay and Silent Bob, Mallrats.
Yeah, well, that's one of them. That came out in the 90s, though. All right, Strazza. I think we've probably taken too much time than we usually do for these things. What's the big takeaway today? I mean, look, you've raised my eyebrow about this mall trade. That's an interesting thing that deserves some digging into. Energy continues to lead. That's no surprise. And maybe we talked about this earlier in this call that maybe all those people that were being aggressive on the calls the last 3-4 weeks, maybe they were onto something. Maybe they weren't so dumb money after all. Maybe we owe them an apology. Maybe they knew something.
And you're still seeing it. We just talked about a number of reopening economy names and then also some software and some growthy stuff. So it was also a slow week. Only had 4 days to the week last week. If you guys are wondering why this list is a little bit short.
That's true. We did have a holiday shortened week last week. I forgot about that. All right, Strazza. Well, the big takeaway here is if you want to get crazy, go buy yourself some January 2024 rig calls at the 5 strike, pay $1.85 for them, and YOLO responsibly, as JC would like to say. And if you do that, let us know. I'd like to hear how that goes.
I apologize for my cat meowing throughout this whole video. I don't know what she's so upset about.
She wants to know why you aren't paying attention to her. I get it. All right, Brandon, we're done here. Adios, everybody. Thanks for joining me, Strazza. We'll catch you next time, everyone.